Hi, this is Tony Sagami. Hey, I want to talk to you this week about U.S. stocks. And the question I want you to ask yourself in your portfolio is, do the American stocks that you own have a China strategy? And by China strategy, I mean that's an effective distribution channel to tap into that giant market of 1.3 billion people with money to spend. And so you need to look at every stock in your U.S. portfolio and see if they have. Let me give you some examples of American companies that do have effective China strategies and are making mountains of money because of it. Let me first start with General Motors. It wasn't that long ago before the General Motors had to be bailed out. But they have, thanks to China, business has really changed for them. In the month of July, they reported a 22% increase in auto sales in China. 22%. And that's almost 200,000 cars were sold in China. So they have a very effective distribution strategy. The Buick brand is very popular over there. Now let me compare that to Ford. They don't have any brands that have really gained popularity or any traction over there. And so they only sold 17,000 cars in the month of July, only 10% of what General Motors did. And their sales actually fell by 6.3%. So there's the have and the have-nots in the auto world, of the American auto world, of who's doing well in China and who's not. Another stock is Yum Brands. Yum Brands is the operator of KFC, Pizza Hut, and Taco Bell. They're very much a U.S. company, but they're also a very big Chinese company. They have 3,500 stores in China now, and they derive over one-third of their profit and more than half their sales outside of North America. And even though they have 3,500 stores there, Yum Brands has said they expect to have 20,000 stores there within the next 10 years. So they have made China a central part of their growth strategy. Lastly, let me talk to you about Coach, the maker of those very expensive handbags. Coach just reported their quarterly results, and they were fantastic, much better than Wall Street expected. And they reported a 34% jump in profits. Fantastic. But get this, North American sales were only up by 6.3%. Nothing. China sales, on the other hand, were up by more than 100%. So they couldn't be more opposite. Now, Coach currently has 41 stores in China, but they plan on opening 30 more within the next 12 months. And so if they're seeing that type of profit growth with just 41 stores, that new 30 stores should make a big, significant difference. Let me tell you, there's also some interesting things about Coach in China. The male Chinese love Coach products too. In the U.S., Coach is pretty much limited just to the female audience, but in China, both men and women like it. And so that gives them a double bang for their buck. And so that's a company I'd take a look at also. And now, am I suggesting you run out and buy all three of those? No, not at all. But these are the type of companies that have a China strategy and are very profitable because of it. So you need to take a look at the other stocks that you own and see if they have the same type of effective strategy. If not, you need to get the heck out. Until next week, this is Tony Sagami.